What's up, guys? Welcome back to my channel. It's Fred here. I'm the chief market strategist at Toastbeans, and today I want to give you guys a overview of the stock market and what I see for the S&P 500 going forward. Now, we had a pretty big sell-off over the past week, right? Week and a half, and that started with the Fed meeting on October 27th, and ever since we've sold off. And ever since then, the wall of worry has been growing. We have the government shutdown. We have a rising unemployment rate. Now we have people wondering whether the AI bubble is too big and then eventually it's going to pop. So all of that is the wall of worry. But I'm here to tell you that this is a standard correction, a 5%, 4% correction. And I believe that fund managers will continue to chase the S&P 500 into year end. Now, let me break this down for you. Now, let's start with the VIX. So last week we had a pop in the VIX, which resulted in the S&P 500 moving down, but it wasn't as big as the October 10th pop. So as you can see that we have increasing volatility thanks to the weekly MACD turning bullish, but we rejected the 200 moving average, which is a good sign for the bears, but it signals increasing volatility. However, you can see that these candles are inherently bearish for the VIX, so I do expect the VIX to start moving down and getting crushed in the weeks to come. For the S&P 500, you can see that every time we tagged the 50 daily moving average, this is the daily time frame, but we are forming bearish divergences, which is something to watch for possibly in 2026 or later in the year. But every time we come down to the 50, we do get a bounce. We bounce. Will this time be any different? Time will only tell, but you can see that we closed the week with the day with a hammer candle, which is a good sign for the bulls, and we would like to see continuation for the S&P 500 going forward, whether it be the government opening up finally and releasing a lot of liquidity into the market or any other good catalyst. We're going to be looking for that in the weeks to come. Now, investors are extremely fearful. So last Friday, we saw a fear and greed index reading of nearly 13 and 14. And I believe that the last time you saw those numbers was in April of this year. So now, with investors extremely fearful, but stock market near all-time highs, is that something to buy into? I believe so, because things don't crash when the fear and greed index is at extreme fear reading. It'll start to crash when everything is extreme greed. A lot of people are greedy. People think that the S&P 500 is going to move to near to 8,000, 9,000. But with the index at near record low since April, and with a standard 3-4% correction, I believe that eventually stock market should move higher. Now, this is from FS Insight. Tom Lee, he is a extremely bullish guy. Sometimes I look at him, with an objective lens, but in this case, he points out that the fundamentals remain intact with an up November. So stocks up 6 months in a row usually results in November being an up month, and he mentions that the fund manager should chase into year end because they've been underperforming the market all this time. So we have lots of walls of worry. We have the government shutdown, which should be resolved in the near term future. We have a hawkish, quote unquote, hawkish Fed. The repo market stress. We have the NYC race, which actually just finished. We have the crypto deleveraging, which led to crypto just severely underperforming the market. Bitcoin is currently sitting at 100K, Ethereum at 3.3K, but I believe that eventually you should see all these things moving higher, and we have the private credit stress with the banking system. But super cycle's intact, and with stocks up 6 months in a row, we should see November up as well. Now, this is from a fellow FinTwit guy on Twitter, and he says that the percent of stocks over 50 moving average is usually a bottom when stochastics are this oversold. This is the balloon underwater I referred to last week. You can see that this guy, I think he posted Then in January, we should see two 5% sell-offs in the back half of the week, but close the year end strong. And this is pretty much the same thesis that I'm running with. Now with the White House, we're at nearly day 40 of the Democratic shutdown. Um, yeah, they're working, I guess, they're fighting tooth and nail to get these deals resolved and finally open up the government. It's affecting a lot of federal workers. So, all these airlines are having issues, and people aren't getting the EBTs that they deserve for their paychecks. So we'll see how it all plays out. But I don't think the government wants to extend this any further and create further chaos in the markets. Now with the S&P 500 4-hour chart, you can see that we got a really nice bounce on Friday. These are the fib levels that I kind of drew out. I believe that we have a 61% retracement at 679, 680. That should be something you're looking for in the near-term future. If you're a short-term trader, you can see that this moving average, the 50 DMA moving average, is rolling down on the 4-hour time frame. That sits right around 680 as well, 679. So, but you notice that the SPY MACD is trying to get a bullish cross, and we have multiple bullish divergences that are forming on the 4-hour time frame. So hopefully, we can see further upside into next week. Now, another reason why I believe that the sell-off, is merely a correction and not the start of a bigger crash is that the Mag 7 doesn't look to be done at all. In any of their charts, we have, Nvidia starting to get a bullish MACD cross, holding the 200 moving average on the 4-hour time frame, and lots of flow on Nvidia, looking for 200 in the near-term future. So this is around 8 to 10% of the S&P 500. So if Nvidia moves higher, the stock market will as well. And so we have also Apple, one of the bigger mega cap companies on the S&P 500. The weekly looks nowhere to be done. The MACD is still showing bullish momentum. So after three, straight weekly candles, we got one single red candle that isn't even an engulfing. It's not even a bearish candle. And, this is normal in the grand scheme of things. And I am expecting higher prices for Apple and the rest of the tech sector to come. So hopefully this helps you guys, digest what's going on in the market. If there's any questions you have, please check out the ToastBeans applications. I put all my analysis on the app. It's available on the iOS App Store for free, or you can leave your questions down in the comment section below, and I'll see you guys in the next video. Peace.